Yeah, can you answer this question, Pramod? The financial statement that provides a summary of firm's operations for a period of time is dash. Hello.
Now we are able to hear you, sir. Earlier we were not able to hear you at all. We rejoined.
Acha, acha. Okay, okay. Now can you answer this question?
Just having a look. Summary of firm operations for a period of time is statement.
What is the answer? Of
Operation
course,
for a period
income
to
statement,
income
because all
statement.
the whatever you show related to firm's operations and the operating profit which you find is nothing from which statement?
Income statement.
Income statement, of course. So income, the results of operations for a period of time are reported in income statement. And what kind of we record everything on what basis? Accrual basis.
Accrual.
Okay, fine.
Yeah.
Just go for the next question. Answer the next one.
Comprehensive income is best defined as net income. Revenue minus. Net income, first one.
Mm-hmm.
The change in net assets for the period, including contribution, revenue, and distribution.
See, comprehensive income is best defined as net income excluding extraordinary. No. Change in net assets for the period including contributions by owners, but I don't think contributions by owners is taken in OCI. That is all,
Mm.
that is taken in the equity itself directly when you make the statement of financial position. Total revenue minus
Total revenue.
expenses, SOPL, statement of profit or loss. OCI has nothing to do with this. And the change in net assets for the period excluding owner transactions. Of course, you don't take owners transactions very clearly in this, that is like arranging extra share capital, additional share capital, etc. But you have some assets with you, correct? Suppose you are holding a stock and you bought it when it was 100, now it has gone to 180, so there is a increase in the value, correct? Okay, or
Yeah.
else you bought some security or some bond and the intention is to hold it for some period of time and then to sell. So can I say that is held? That is nothing but held for sale. There are three
Yes.
types. There are three types of assets. One is held to maturity. I'm speaking about investments. Held to maturity, held for sale, and trading securities. That means
Mm.
this is held for sale, not available for sale securities. That is available for sale. That means you want to hold this security for some period of time and then you want to sell it, maybe more, for 4 or 5 years. That point of time, any change in the securities or the stock's value will be accounted in which account? Which account will be showing the changes in the investment value? Comprehensive income, correct? What is
Yeah.
this kind of income called? This kind of income is called as unrealized income. We discussed already when we did the chapter.
Mm.
So option number D. Okay. Can you just tell me the eighth answer? What is the eighth answer? Read the question and tell me. Take your time. Because of inexact estimates of the service life and residual life, that is residual life is nothing but when it becomes a scrap of plant asset. That means you did not make proper estimates. What do you mean by estimates? Like how many years you want to depreciate the machinery? Let's say 5 years or 10 years. This is also an estimate. And what should be the rate at which you want to depreciate the asset? Let's say 10% or 15 or 12, whatever. It is also an estimate. That means you did not make proper estimates. And a fully depreciated asset was sold in the current year at a material gain. The gain most likely should be reported where, they're asking you. Please answer my question.
Yeah. in this section, the current income statement.
Sorry. Part of no. How come it's a sales revenue? See, whenever you sell a inventory, you get revenues. That's a part of sales revenue. But when you sell some asset, okay, which you are holding for some period of time, maybe you are holding it for some years, you immediately sell it. So that's called profit on sale of asset. Is it not, is it not other revenues and gains? Is it not other revenues and gains? Not, no, it's not OCI. See, you are doing US GAAP. US GAAP is nothing but when you sell some asset and you get the money in your hands, it's a realizable nature income. How will it go in OCI? It won't go under OCI, correct? Yeah. That's what you will write in the other income section. Yes, Pramod, can you tell me the answer for this question as well others also?
Yes, sir, I will try.
Yeah. See, once after doing the this video, again you should watch and again try some more questions. So what are they asking? An entity has 50% gross margin. So gross margin is 50%. Administrative expenses of $50. Interest expense $20. Net income. So net income what you get is after removing all the expenses from revenue or sales is $10. If the corporate tax rate means the company should pay taxes is 50%. They are asking you what would have been the sales revenue for the year just ended.
Okay.
Very typical question, correct? So this is a very good question. We'll go step by step. See, net income means what? Net income is revenue minus
COG.
cost of sales. Yes, cost of sales minus administration expenses minus the interest and whatever it is given and minus tax as well. So you get $10, correct? Isn't it so?
Yes.
So if your income would have been $20 before tax, then your PAT or net income would have been how much? Would have been what? They have given no $10. That means your tax, tax is how much? $10. Why? Because
50%.
PBT is $20 and 50% of that would be $10. So $10 is your tax and $10 is your net income. Correct? So PBT is $20. Am I right? Yeah. Yes or no?
Yes, sir.
So I reached here. I reached this stage. Okay, PBT. Now can I go for PBIT? Can I go for PBIT? See, I'm going reverse, I'm going up. So whatever I have deducted, I will add to get PBIT. Correct or wrong? Yeah. So 20 is my PBT plus my interest is how much interest income?
20.
20. So can I say this this is PBIT, profit before interest and tax? Why? Because after deducting interest only, see, in the sense, revenue minus cost of sales is gross profit, correct? Gross profit minus administration expense and all is nothing but PBIT. Am I right? Yes or no?
Yeah.
Yeah.
So have I reached PBIT? Have I reached PBIT or not?
Yes, sir.
Yeah, yeah.
Profit before interest.
So now from PBIT, what will I do? I will deduct the administration expenses to get the gross. I will add that to get the gross profit, correct?
Yeah.
So 40 plus 50 is equal to 90. 90 is my gross profit, correct?
Yeah.
Now, if 90 would have been my gross profit, so revenue minus COGS is gross profit. Gross profit is 90 and the margin here is 50%, correct? So 50% represents $90. So 100% would have been how much?
135%.
100 into 90 by 50. Can I say 100% is nothing but 180?
180, sir.
So can
Yeah.
I say my revenue is 180? So from revenue, if I remove 50%, because see, gross profit margin is 50%. So 100 is suppose my sales. Of this gross profit margin is 50%. That means 50% is my gross profit. That is 50. So this is what? 50 is my cost of sales. Correct or wrong?
Yeah.
Yes or no?
Yes, sir.
That's what, correct? So I got my revenues how much? 180. So my revenue is 180. If anyone has got any doubts, please ask me. See, if at all your revenue is 100, let's say, and they say that your gross profit margin is 20%. So you always calculate margin on sales only, na? Am I right?
Yes, sir.
So
Yeah.
20 will be a gross profit. So 80 would be what? Cost of sales or not?
Yes.
Yeah, the same thing here. So I got 90 as my gross profit margin. That represents 50%. So 100% is how much? Sorry, this is
Mm.
$90. 180. Simply.
Mm.
That's it. Note this down. We'll go ahead. Nice question. If this is done, then I'll give you next question.
Just noting it.
Yeah.
Okay.
Yeah. Now, I'm giving one more question. This time you need to solve. Okay, can you do this question? This is the question. An entity had the following opening and closing inventory balances during the year, current year. So This was at the beginning. This is at the end. Opening and closing. Opening and closing. Finished goods, raw material, work in progress. Following transactions and events occurred during the current year. 3 lakh worth of raw metal were purchased, on which this much returned because of defects. This much of direct labor costs were incurred. This much of production overhead costs were incurred. They're asking you COGS for the current year. So I'm waiting. Please do this.
Sir, what is the question number, sir?
Yeah, the question number is 12. Yeah, better. You may be having that question to read properly. You may read that. I'll write some formulas. Try to do that. COGS is equal to COGM. COGM
Cost of good manufacture.
plus what? Beginning finished goods.
Place purchase minus.
Yeah, beginning finished goods minus closing finished goods. Correct? This is what is the formula?
COGM.
This is for the COGS. COGS is equal to cost of goods manufactured plus beginning finished goods minus closing finished goods. Because we are going to sell the goods now. So then whatever we have manufactured, to that we are adjusting the changes in finished goods. That means COGM adjusted to changes in finished goods. But now the real task what applies, what is with you is, what is COGM then? How will you find out COGM? Am I right? I gave you the simple thing for COGS. Now you find out the COGM and tell me what is COGM. So now I will write the formula of that also. COGM is equal to
Beginning plus.
raw material, whatever you are using. Okay, fine. Raw material, whatever you are using, plus direct labor plus production overhead. Correct? Fine.
Yes, sir. Yeah.
And then plus beginning work in progress minus closing work in progress. That means change in work in progress. Fine.
Yeah.
Now raw material, what will you take for raw material used? You'll take beginning raw material plus purchases. Purchase also, are you doing some purchase or not?
Yes, sir. 3 lakhs.
Yeah.
Yeah, so what we will write the term here is raw material used. So raw material used is, now I am writing raw material used is equal to beginning inventory of raw material plus purchase of raw material minus closing inventory of raw material. Correct? Isn't it so? Beginning inventory of raw material plus purchase. But one more thing this question has. There is some return of 20,000 because there are defects. So shall I also adjust that? Yes. Minus purchase return of raw material. Please write down that point as well. And just find out the raw material used and tell me what's the answer for that, please. So I have given all the hints and formulas required. Now it's you who have to do and tell me the answer. Come on, I'm waiting. What is the beginning inventory of raw material? 1,05,000. Yeah, purchase is 3 lakhs. Minus closing inventory, minus returns 20,000. Minus closing inventory of raw material is 130. When you adjust all that, what did you get raw material used as?
2,55,000, sir.
Sorry, madam.
2,55,000.
2,55,000 is your raw material used. Plus, you should take direct labor and production overhead. Add. Plus, beginning work in progress is 2,20,000 minus closing work in progress is 175. When you do all that adjustment, you get COGM. Take COGM here. Add beginning finished goods. Less closing finished goods, will get COGS. Finish it fast. I'm waiting for the final answer.
COGM is 16,15,000, sir.
Sorry, 2 lakh?
COGM.
COGM.
Yeah.
How much you got, madam?
16,50,000.
Okay, you got that, no?
Yeah.
Okay, then put it here and do COGS.
Fourteen lakhs 80,000. A. Sir, A is the answer.
A. Everyone got the same answer? Hello? What about all
I
of?
was
Okay, okay, you are doing? Fine, fine, fine. Okay, okay. Try and get, no worries. Take your time. Yes, madam. Like 14 lakh 80,000 may be correct because all the things are all right now. So you may get the right answer.
okay, sir.
Got the answer? 14,80,000.
Yes, sir. 14 lakh.
Yeah, done that. Good. So do this question then.
For 6 lakhs.
6 lakhs.
6 is there. No, 6 lakhs.
Yes, madam. 6 lakhs. Correct.
Minus
Yes, sir. 6 lakhs.
Yeah. Go do this question.
Question number, sir.
Question number 15 on screen. So if you do some 2-3 questions of this kind, you'll get good practice.
So we need to take both the years, sir. January 1 and okay.
Ending year. So in this one, the raw materials we can take both the years, sir. 38 plus 45.
Madam, one is opening, one is closing.
Yeah, yeah.
So you should remember what to do. Add opening, less closing always. See, you had 38,000 in the at the year beginning and $45,000 worth of raw material in the year ending.
Yeah.
So didn't you use that beginning inventory
No, sir.
that you have used? So you have taken, na? And and whatever the difference in this, like you have used that, and this is left over with you. You're not using it, so you're subtracting. Correct?
7,000.
You got the answer?
No, no, sir. 2,96,300 is the COGM, sir.
Just a second, madam.
No, sir. No, sorry.
These are the answers. These are cost of on the company's cost of goods, and you have to find two things: cost of goods manufactured, cost.
COGM and COGS.
Yes. Once you get COGM, add less beginning, like work in progress, you'll get the answer. Sorry, finished goods, you get the answer.
Not getting, sir.
Yes, madam, what's the answer? If you're not getting, I will do. If you're getting, that's okay.
Not getting, so this.
We'll
Not
do.
getting
No,
so
no problem.
close to 646. I think D.
Okay, I'm doing it from step by step. Fine.
Yes, sir.
So beginning raw material. So I'm going for the COGM first. So beginning raw materials is how much? 38,000. Add purchase of raw materials. Correct?
1 lakh.
So for purchase of raw material, you should check whether there are returns or not. No returns. So they already give a net purchase of raw materials. That's what we did in the previous that time also. Correct? Minus ending raw material. So what is that? Like 45,000. So what is that net you get?
1,08,000.
1,08,000. To that you have to add the direct labor
2,36,000.
and manufacturing overhead. What are the overheads given? Factory rent 59,000, depreciation 18,700, and material handling cost 35,800. So if you take all of them, you get 1,13,500. Correct? So you have to add these two figures,
4 lakhs 40.
these three figures, then you get 4,57,500. Is it right?
Yeah.
These three, 1, 2, 3. Add beginning work in process less closing or ending work in process. So what is the beginning work in process? 21,000. Closing work in process 10,000. When you do this,
4,68,000.
you get 4,68,500 is your COGM. Add beginning finished goods less closing finished goods. 78,000 and 1,07,000. You get the COGS.
4,39,500.
4,39,000.
Okay. See this from the beginning.
Yeah, just scroll bit up, sir. Could you scroll down, sir? More down, sir, bit.
Yeah.
Okay, sir.
Done?
Yeah.
Okay. So let's close with the last question. Do this. 16th question. Net income. Fast. See, they have given something to confuse you. This will not come, this is not a part of any calculation here. This has to be shown in the statement of changes in equity. So don't get confused. What is your discontinued what is your like income from continuing operations? 72,000. This is net of tax, correct? Your tax
Yeah.
rate is 40%. What is the discontinued operations? You got this 70,000, correct? Hello?
Yeah.
Yeah.
It's a loss, am I right?
Yes.
So discontinued operation has given you a loss, and we will take like 60% of this. Fine.
Okay.
Whatever the tax, will adjust the tax rate. Because that
40%, na sir?
40%.
yeah 40% if we deduct means 60% only we have to take, no?
Okay.
And here we can get some refund in the future, tax refund. Let me be very clear, because it's a loss, less discontinued operation. So 70,000 into 1 minus 0.40, that is we are taking 60% of this. 6 7 is 42, so we can take 42,000. We'll deduct, we get 30,000. That is our net income. Okay, they are asking you find out net income for the year. You know now already we have discussed about this in the format while we were doing the statement of while we were doing the income statement. You remember or not?
Earning per share. Yeah.
Yeah. We will remove the discontinued operation and tax effect of that also. Okay. So this is what it is. Now I wanted to do some 15 questions or 10 questions randomly from your side. Fine. And we'll start a new topic tomorrow immediately. We will start just a second. I'll start a new topic. You want from part 1 or part 2? Part 1.
Anything is fine, sir.
Okay, so we will start with tangible assets tomorrow. Tangible
This
assets.
is part 2.
Part 1, part 2 only. We will take tangible assets tomorrow. Okay. Tangible assets. That is property, plant, and equipment. Let's start the class tomorrow for that. Fine. Then we'll, after finishing that chapter, that and intangible assets, 2 chapters I'll finish back to back. After finishing those 2 chapters, we'll do questions from those 2 chapters. Okay. Fine. Yeah.
Okay.
Yeah. Thank you.
Thank you, sir.
Thank you. Thank you.
Including